Price action is at the core of charting, and it's actually quite a simple concept on its own. In short, it describes the movement of price, which allows for the construction of context to better determine future influences on price behavior. Price can essentially only move up or down. These are among some of the common root words used to describe up and down movements, which are easily done when examining past price movement for the most part. It's pretty straightforward, but gets complicated when trying to determine the magnitude and duration of how price can develop. Some common words, such as flat and neutral price action, basically describe sideways movement on the chart when up and down forces are essentially equal and price remains relatively unchanged. And on a side note, bullish price action to mean price going up is often used because it is said bulls charge up and forward, while bears attack bearing down with their claws. So it's definitely a lot of synonyms to describe essentially the same things, though generally if an angle is steeper, it is likely to last for a shorter duration. In order to be more sustainable in the long term, it is generally a rule of thumb that the trend be at around a 45-degree angle to be more balanced. Naturally, for a trend to last longer, it needs to be on a shallower trajectory. In other words, pullbacks or retracements to get closer to the more balanced 45-degree angle. In the case of a more sustainable uptrend, the market can have some minor downswings to relieve selling pressure, and in the case of a downtrend that will last longer, there will be minor upswings that will also correct it to a more moderate angle. Don't get too caught up in measuring the exact angle. 45 degrees is just a nice moderate balance for any stable decline or incline. It's not simply the angle, but its duration. So a steep angle can actually be normal and natural as long as it doesn't continue on for too long, especially during events where the market accelerates price to newer highs or newer lows. Also, when price begins moving on a really flat trajectory well below 45 degrees, or if it even goes completely horizontal for a time, that can indicate some weakness in the existing trend, or it can point to a setup where the market is building up to a bigger move. It's not uncommon for the market, especially a broad stock market index, to begin moving sideways and falling into a prolonged range of relatively low activity prior to a major move. A volatile or unstable price movement is sometimes called whipsawing because it resembles a sawing motion or the teeth of a saw blade. A distinguishing feature is the rapid change in price during relatively short periods of time. A volatile price movement can occur in downtrends, sideways ranges, or uptrends, but normally it's associated with the neutral to bearish price movement when markets are in a more uncertain time. As discussed earlier, price action on a chart will also be influenced by the particular market, sector, and current conditions.